you see a model that you really love, but it's on an asset that you don't trade, or during a session that you're sleeping or something, you totally can play around with trading the same models on different assets, different time frames, different sessions. So yeah, thanks everyone for joining today. Hope you guys are having a good start to May. I thought it'd be a good opportunity today to, play around with ICT's Venom model and see if we can get it to work in other sessions. I know I'd mentioned last week, for those of you that were on, that we could definitely play around with this and test it out on different assets, different sessions, and so I wanted to just do exactly that today and see kind of if we could get something else that might work. And so gold is obviously an asset that's has pretty consistent volume throughout the day in all the different sessions. So I've started testing out a similar model with gold, actually using the 3-minute time frame during London session, but with the same rules otherwise. And so I want to kind of test that out today and then kind of see what the insights look after we were able to test it out a little bit. So for those of you that weren't able to join last week and the Venom model is new to you, I do want to do like a brief intro. I'm not going to spend quite as much time as I did last week because we'll have the original Venom model up pretty soon, I think the next couple days. But pretty simple. The base model that he went over kind of talks about the 1-minute time frame with NQ, the NASDAQ, on futures, basically trading the first 90 minutes after New York opens. And literally all we were doing is kind of basically marking out the kind of 90 minutes before market opens, so 8 a.m. to 9:30 a.m., and then looking for a sweep of either side of it that had a balanced price range form, so basically 2 overlapping fair value gaps, and then it was just simply a limit order, and you're targeting out either the other side or just a fix like 2 to 1. It's kind of what I was testing when I initially looked at it. And then, and I apologize, I'm going to go through this a little quicker than I did last time, so let me know if you have questions. But I also came up with kind of a breakout trigger as well. That's just kind of leaning on my own insights from a similar kind of reversal model I've traded a bit too, where instead of waiting for that BPR retest, like sometimes you'll see a reversal, but then you don't actually get a retest back to these levels. It just kind of takes off. So one way to kind of catch those is these breakout triggers, which is basically, say we swept the 8 to 9:30 a.m. high, and then we formed a bullish fair value gap. We then form an engulfing candle that inverts that initial fair value gap and closes pretty strong. It'd just simply be a market order at that point with a stop at the open of that candle, and you're targeting out the same kind of 2 to 1. And when we did this last week, I'll pull up the analytics just so you guys can kind of see when we tested this last week. That second trigger was actually better than the first one. So this is what we got last week, about 9% in January of 2025, and I used the entry trigger 2 for that kind of breakout trigger. And so overall we had a 50% win rate, but the second trigger was slightly higher win rate and had like 2/3 of the profits. So I definitely think that this kind of second entry trigger is going to be really important, and especially with gold today from my testing. We'll see how it goes the rest of the session, but it's possible that for gold during London session, this might be the only entry trigger that you want to use for gold. I'm not sure that this BPR retest is actually profitable on gold using the same kind of criteria in London session. So that's the gist of the model. There's a couple other rules that I kind of came up with. So if you're in this range and there's no BPR until price is already like reversed quite a ways, if you can't get like a 2 to 1 by the time it gets to if you put your take profit at the other side of this kind of pre-market range, then you're going to pass on those trades if you can't get 2R prior to the kind of other side of the range. No trades right during news, and then it's okay to take a second attempt if you get stopped out on the first one and a second one shows up. So, and yeah, this is kind of exactly what I was saying. I wanted us to play around with maybe other sessions, maybe different assets. I'm not going to show it today, but there could be opportunities to use some optimizations with trailing stop loss and stuff. So really specifically today, all that I'm tweaking, it's the same exact model. There's 2 things that I'm tweaking. Number 1, I'm using the 3-minute time frame. I think that's going to work a little bit better on gold. And we're going to be trading XAUUSD. If you trade futures, obviously GC or MGC, the futures pairs would be for that. But otherwise, the exact same model. We're just, so that's the first thing, kind of changing the time frame and the asset. And then we're going to be trading the London session. So London session opens at 3 a.m. New York time. So basically, instead of marking out 8 to 9:30, we're going to mark out 1:30 to 3 a.m. New York time. And then same thing, we're going to be trading the first 90 minutes of London session. So basically 3 a.m. to 4:30 a.m. London time. So basically looking for sweeps of the kind of 90 minutes before London opens on either side, and then looking to try and catch a reversal either side after that. So basically same model, just with a slightly different asset and different time frames. So I've already started doing a little bit of testing, but I figured we might as well jump around a little bit. Does somebody have a date and year in the last maybe couple years? I don't want to go too far back, and we'll start backtesting at some point. That someone mentioned in the chat when you guys want to test, and I'm going to make a strategy so I can combine these a little bit later. So this is Venom Model, Gold London session. I'm going to have a strategy that I'm going to tie to my previous testing as well as this new session. So yeah, let me know, someone in the chats, month and a day, a month and a year, May 2024. Okay, that works. So I'm just going to edit this testing I did before to add the strategy so we can just filter on all of these later. And then I'm going to add a new session and we'll start this. So this will be ICT Venom, Gold London session, May 2024. I always do 100,000 balance, 100,000, and we're going to do XAUUSD. Doesn't really matter if we use Owanda or Dukascopy, we'll do Owanda. And we're going to start what we said, May 2024, right there. And we'll see how far we can go. We can actually backtest this pretty quickly with 3-minute time frame. So I think that's everything we need. Let me just make sure I have the strategy so that we got the strategy incorporated too. And we're good to go. So I'll show you guys kind of how I have my chart set up, and then we'll kind of dive into the backtesting shortly. So a few things I have on my chart here. Kind of same setup as I showed last week, with pretty much just a couple indicators. I've got the fair value gap indicator. That's going to help us see when these fair value gaps are created, because that's obviously pretty important to be able to visualize those. And then for the session indicator now, I have basically, I'm using the Asia session, but it's basically just the pre-market London session from 1:30 to 3. So that kind of 90 minutes before London opens. And then for the trading hours that we're going to use, it's basically just the first 90 minutes of London. So 3 to 4:30 a.m. New York time. And then I also added these London session lines just to help make sure I stop trading after the first 90 minutes is over. But that's literally all you need on your chart. Everything else, we're just going to visualize. I have news events because obviously we don't want to trade during super high impact news events, but that shouldn't be as common with London session. And for the go-to, I just have start of London session to start at 3 a.m. London time, and otherwise we're good to go. So I'll go ahead and go to the next London session. And yeah, this is going to be on the 3-minute time frame. So you can see I've got 3-minute time frame. And I'm actually going to save a copy of this layout so it's not using the drawing tools I've already done before. So let me just make a copy of this real quick. So stream. And I'll just delete all my old drawing tools just to make sure we're cleaned up. So delete 50 drawings. Okay. Good to go. So as I mentioned, all we're looking for as we come into new sessions is looking for a sweep of either side of this range. I don't care about high time frame bias or anything, since we're just going for like 2-to-1 base hits. So we'll kind of play forward and see if we get a sweep of either side, which we do. And we've got a nice bearish fair value gap already. So if we form a BPR, then we can potentially look for a reversal. We've already got a engulfing trigger right here. So let me just double check the decimals real quick. So 410, 425, yeah. So already we have a engulfing trigger right here. So as we came down, we had a bearish fair value gap, and then this falling candle was both engulfing and it closed just barely on the other side. So going back to our entry trigger 2, it meets all the criteria in this case. We had a engulfing candle, it was red then green. It fully engulfed it. It closed above this previous candle. So this is our entry trigger number 2, and we're simply just going to do a market order at the close with the stop at the open. So I'll come here, place my position tool right there, and we'll go for 2 to 1. I do also want to mention, obviously, if you're trading CFDs, you might want to factor in spreads to make sure that your backtesting is a little more reliable. It's less important with futures because the spread's a lot tighter. But I think like and I might need to look this up a little bit later, but I feel like 30-40 cents is usually like pretty common for gold. For those of you that trade XAUUSD. But yeah, if you need help figuring out what inputs to put in the spreads, definitely just reach out in the chat and I can try and help look that up a little later. But I don't have them enabled for this quite yet. So we'll place an order, we're going to do a market order. We're going to call this entry trigger 2 because it's this kind of breakout, Venom breakouts trigger. I'll save it and we'll see what we get. How do we barely go? Okay, cool. We stopped at just shy where take profit, but did end up hitting it. So nice win right off the bats. And that's it. That's all you need for this first session. Again, we're only trading the first 90 minutes, so I'm pretty much just one and done. After I get a win, we're just going to the next session because it's pretty unlikely we'll come all the way up. Trading in 3 minute, it's pretty unlikely we'll come all the way up here and have a short in the same session. On the 1 minute time frame, it did happen a few times, but not as common on 3 minute. So pretty expansive Asia session. We'll take a look and see if we have any trades that populate meeting our criteria. So we do have a BPR right here. So as you can see, we have a bullish fair value gap that overlaps with this bearish fair value gap. So this is our BPR right here. And so using the first entry trigger, we would do a limit order on the BPR retest, stop at the low, and target out simple 2 to 1 right about there. So we'll do a limit order for this case. This is going to be entry trigger number 1. And let's see how this one works out. So we got tagged in. I'm going to play candles forward a little faster. Taking its time. Ultimately ended up being a loss. I didn't really, I mean, again, I haven't had a chance to go through it too big of a sample size yet. As you start to backtest this and get a larger sample size, I recommend like your first run through not doing any trade management. But if you see in the analytics, this could have profit or break even. If you start to see like quite a lot of trades that are going up over 1.2R and then coming back on you, it might be worth doing some trade management. Maybe after like, I don't know, 1.5R or something, potentially could save you some losses, but you'll need to test a little bit more. So for right now, I'm not recommending any kind of trade management. We're just going to let these play out. So unfortunately, had a loss. This one took a little while to play out, but ultimately just one win, one loss so far. Now we come into this day, we're pretty close to the Asia high. Let's see if we get a sweep of the high or the low. There we go. And now we have a couple bullish fair value gaps created. Big fair value gap created. So we can still play this in the original Venom model I did. It didn't really matter how far it goes up as long as it meets the criteria and the time window we're looking at. I have a suspicion there probably won't be a significant enough reversal before our 430. Yeah. So we're already at the 430 time frame. We never saw anything that met our entry criteria. We had a pretty expansive move to the upside. Nothing to indicate that we're going to reverse. So just simply no trades this day. And coming into this next day, we've got a sweep of the lows. We've got one bearish fair value gap a little bit higher up here. I don't think we'll get 2 to 1 at this point, but we can kind of see if we shift a little further. Okay, so this actually might have been a market entry. Let me see if we can get 2 to 1 and I'll play it if so. Okay, so this was the Venom breakout trigger. We had a bearish fair value gap right here and a big engulfing candle that inverted this fair value gap. So this would be where you would put the position tool for your long kind of market order. But in this case, we don't have, we can't get at least 2R on by the time we get to the other side of the range. So this is like one of the other rules that I went into and basically said, like, if you can't get at least 2R, then we're going to pass in these trades. Might work out, but I would just basically make a note here and say, like, not 2R to other side of range. No trade. And so I'm not going to record this one. We'll see how it would have played out. Would have been a loss. So worked out this time. There are going to be sometimes it works out, but yeah, if we're putting the risk on, I want to get at least like 2 to 1 for this strategy. So I just would pass on this if we can't get at least 2 to 1. So go to the next day. All right. So we've swept the low now. We've got a couple bearish fair value gaps. Let's see if we invert them and form potential BPRs. Kind of just continuing down for now. This might just be kind of a downtrending day. It's no problem. We got another bearish fair value gap here. We could potentially play off if we see price start to reverse, but no, it's pretty much just nuking this day. So really no reason to try and long this. It's just going straight down really. We do have one new bearish fair value gap here. A little bit of time left in the day. And let's see if we get a BPR there. Yep. So we have a BPR right here. We did sweep these lows, so maybe we can get a reaction, at least a little pullback to the upside. We've got our BPR, and we can potentially take a BPR retest to try and catch a little bit of a pullback right here. So 2R, we'll do a limit order here. This is entry trigger number 1, and see what happens in this case. Nice, got a win. So yeah, this is again where spreads might come into play. The low was like 745 and we got down to like 337. So this one probably would have been pretty close to stopping out if you had like a 30-cent spread or something. That's why I think, actually no, 304. No, you would have been fine. Like it was like over 60 cents. So even with spreads, this would have been a win. I think it's just if it comes within like 30, 40 cents with CFDs, that's where like the spreads might get you. But yeah, we got a nice win out of this. So and the entry did happen before 4:30. So it pretty much met all of our criteria. We came down. We had a BPR formed right here. Enter on the retest, and just took a simple 2-to-1. Not shooting for the fences for it to come up all the way back here or anything, just going for little base hits for the base model at least. I'm just curious now. It did actually come up quite a bit, but again, we're just kind of going for the base hits. You can potentially look for a trailing stop loss, so I'll kind of show you guys what that might look like. So the whole point of a trailing stop loss is after you backtest like your initial base model, which is maybe just going for those base hits, you want to do some additional testing and see, is there a way for me to hold my winners longer and like capture moves like this where it kind of keeps going instead of just closing, for that base hit, trying to hold it a little bit longer. And so I did a video a while back on YouTube, and there's also a guide in the Discord, like how to optimize your trading models. And there's really 3 trailing stop losses I went over. One of them was basically like a fixed 1R trailing stop loss. So you're at 2R here. After it hits your 2R, you'd kind of bump your stop loss up to 1R. And then you would kind of follow it along until it pulls back at least 1R. So we got up 3.04R. You would have put your stop loss at 2.04R, which it didn't quite come back to. So you would have been able to trail this pretty far. I think like 5.98, it came back to 5. Yeah, you could have trailed this all the way to 5.43R with a like fixed 1R trailing stop loss. So like over double your initial results if you do that. The other one is kind of a market structure trailing stop loss. So you kind of literally just follow it to the upside until it forms a lower low. And so where would that have been in this case? You're still forming higher highs and higher lows. And then probably about this candle, when we take out this low right here, I'd probably close it around here. So you would have been able to get like 4.91R if you were using like a market structure trailing stop loss. The other one I talked about is what's a concept called price weighting. And it's something I actually learned from Casper. He's another YouTuber. And basically, once price hits, kind of takes out new highs, you will kind of start to trail to candles before. So we didn't really take out any new highs until about here. So you might need to start like when you do your initial trail, you have to figure out like what's the max amount you're willing to like give up. Maybe you start the trail at like 1.5R, 1R or something like that. But basically the whole point of price weighting is after it takes out new internal or external highs, you start to trail your stop like the candle before. So I think it was this next candle right here that took out this internal high. So you would basically trail your stop to the candle before. And same thing, after price came and took out this internal high, you would trail your stop to the candle before. Once price took this internal high, candle before. And there is another high over here we could potentially go off. So again, once this one is swept from this candle, So you kind of literally just like follow as price continues to make higher highs and higher lows. You're kind of just slowly trailing up your stop loss. Kind of same thing after this high over here was taken out with this kind of doji candle. We would have trailed our stop loss right here. And I think this is probably where the price weighting would have gotten you out. So you potentially could have gotten 5.22R. So literally all three trailing stop loss examples could have improved the results for this trade. You need to do the optimizations to see if the bigger winners make up for giving back some of the profits on some of the other trades. But there could be opportunities to use some trailing stop losses with this or any model for sure. But yeah, overall we're up about 3R so far from the first week of testing we've done. We swept the low. We've got a bearish fair value gap. No reversal to the upside yet. So continuing to just look to see if we get a BPR or a, I think we have a BPR right here. So we've got a bullish fair value gap here that overlaps with this bearish fair value gap. So the place where they overlap is basically right here. So that'll be our BPR. We're going to enter on a retest using the low as our stop loss and target outs fixed 1 to 2. Kind of going for these relative equal highs, which could happen. This will be entry trigger number 1. Make sure we, as long as we get tagged in before 4:30, we're in line with the model, which we might not. We might not get tagged in before 4:30. Let's see, it's 4:27. Yeah, so didn't quite tag us in before the first 90-minute window. So I'm going to just simply cancel this order, and I'll make a note. Entry wasn't before first 90 min of session. So sticking to the model rules, I'm literally only trading the first 90 minutes of the session, and I haven't been tagged in yet. Again, we'll see how it plays out just for fun. Yeah, would have been a loss. So there's a reason for the rules, I think. The first 90 minutes of pretty much any session is generally the most highest volume, highest liquidity. I think in the New York session, the last like hour or so sometimes picks up a little bit, especially when there's earnings and stuff. But usually the first 90 minutes is kind of why ICT calls them the kill zones. So we didn't take this one, and it again saved us from a loss. So where's price now? All the way up here. So we've got an uptrending Asia range. We swept the pre-market range. I keep on calling this Asia range. I'm used to the yellow, but yeah, this is just the pre-market London range, and we have an engulfing trigger right here. So we had a bullish fair value gap, and then we have a nice bearish engulfing candle, green then red, closed really strong below it. So we would just simply do a market order at this point with the stop at the open of that candle, target out a fixed 2 to 1, right about there. We'll do a market order. This is entry trigger 2 for the tags, so we can check the analytics later. It's kind of floating around. Unfortunately, was a loss on this one. So we could potentially, yeah, there's not going to be time for a second trigger here because it's already at 4:30. But if this had like stopped us out a little sooner and then another trigger presented, you can try like 2 attempts with these. But with the 3 minutes, as long as this one took, we don't have time to have a second trade. So even if it works out, we just won't be able to take it for this one. So go to the next day, and then just out of curiosity. Yeah, it went up for quite a while. I think pretty late in London session it finally started reversing, but nothing after that initial loss. So let's see, we haven't swept the higher or the low yet until there. And then let me see if we had any. This might have been like a super small fair value gap. Let me see. 245, 240. So literally like a 0.005% fair value gap. I think when I don't think I've added this to the strategy PDF, but when I did the dynamic range strategy, like I think I said if there's 2 fair value gaps right next to each other, if the first one's less than like 20 cents, maybe we'll just combine them. So I'll probably just do the same here. Technically, we did invert this tiny fair value gap here that was like 0.005 cents. But I'm just going to combine these and see if we can get a valid entry trigger using kind of that expanded bearish price. Bearish one. So yeah, we have an engulfing candle right here. So now that we have inverted this, we've inverted this fair value gap by a nice closure above. We have a nice red then green bullish engulfing candle. So we can try an entry trigger 2 right here. Potential 2R right there. So I'll buy markets, entry trigger 2, and see what we get from this. Unfortunately, came down for a loss. So a couple losses, couple wins. We're still up a little bit on the month, but probably not going to have time for a second attempt. Yeah, we would have had a loss either way, even if we took this first one. So yeah, just price didn't have any follow through after it inverted this initial fair value gap. So next session. And I guess like another thing for perspective for this strategy, it's maybe not as profitable as some of the others that we've done. Like I think a couple weeks ago I tested like a SMB Capital scalping strategy, but the fact that we're only trading 90 minutes each day kind of puts it in perspective. Like versus I think I was trading like 7 hours a day for that SMB Capital strategy. So it might not give you, you know, 10, 20 R a month, but even if you're getting, I don't know, 3 to 5 R a month, and you're only trading 90 minutes a day, like that's pretty good. So I think this is a potential model that could give you those results. And yeah, good to see you, Net King. I'm testing out the ICT Venom model on gold during London session to see kind of how it works out. But so yeah, we swept the low. We have potential BPR here, yeah. And so yeah, we had BPRs, but we continue to make additional bullish. It doesn't happen super often. I haven't seen many examples like this, but we'll do a limit order here. This will be the entry trigger number 1. And spoiler alert, we already saw the result. Would have been a win. So might be something to play around with. Again, if you have cases where there's multiple fair value gaps or multiple BPRs even, you know, which one do you take? It seems like price is pretty reactive to the first one. So we could have used this initial, we could have definitely used this initial BPR. It would have like barely tugged us in, but I think either one would have worked in this case. So we did catch a win that day. So what's up? We're halfway through May. We're still only up about 3R, but again, only trading 90 minutes each day. That's honestly not bad. So no sweep of the low until there, and then pretty much immediately an engulfing reversal. So oops. So I'll draw my bearish fair value gap right there, and then nice engulfing candles. This will be our Venom breakouts using the just a market order right there, and we'll target out 2R. Place order, market order. This is entry trigger number 2. And see what we get with this one. Pretty much immediately draw take profit. Yeah, like when you get these like V-shaped reversals, these are even higher probability than ones that maybe like take a little while before they kind of invert the fair value gap or reverse. So I would say like if you're looking for a true like A++ setup, like if they have this kind of V-shape reversal pattern, they're even going to be higher probability from the models he's shown, and also just some of the testing that I've done. And potentially even these could be ones that are likely to even trend to the high. I'm actually curious now, would we have ended up going higher? We know a little bit higher. I think if you have like a range here, we probably stopped around like the midpoint of this. Showing you guys more than I would, but yeah, sometimes you stop at like the midpoint of a range too. But yeah, we got it like very quickly to our take profit. These are like definitely the, you know, A+ setups using this model for sure. So a couple wins recently that have helped get us kind of back on track. We've swept the highs, but don't really have any bullish fair value gaps to play off yet. So even if we reverse here, there's really no bullish fair value gaps anywhere in here that we can play off of on this time frame, at least. Maybe 1 minute there might have been something, but on 3 minute there just really wasn't anything for us to do. So we just weren't able to catch this reversal, even though it ended up playing out as we expected. Let me see, we've got where'd price go after that? Up here. Just waiting for a sweep of the high or the low, kind of just range bounds. Yeah, we didn't sweep the high or the low of the pre-market this day, so it's just no trades. Next day we're at the lows, so we can come here. We swept the low, and we're coming up into these bearish fair value gaps, and I think we have a BPR right here. So we have a candle right here that overlaps with this bearish fair value gap. So we can put our BPR kind of right here. It's kind of both of these candles formed a bearish fair value gap. So we can do entry on the limit right there. I don't think we can get 2 to 1. That's the only thing. Yeah, so we can't get, it's only a 1.1 R using the limit order for this case. So I would again probably just say not 2 R to other side of range. No trade. So I would just pass on this one. And again, just out of curiosity, we'll see. You wouldn't have gotten a retest either way. So again, wouldn't have even been a trade, even if it was. But it's not something I would have recorded since we couldn't have gotten more than 2R to the other side. We do still have a little bit of time left in the day, and there could be a potential downside reversal if we come back to this previous bullish fair value gap, but we don't have a whole lot of time left. Let's see if we get a BPR. Nope. We did invert this bullish fair value gap over here, but there's no engulfing trigger. Again, you can kind of see here we did have a pretty strong red candle, but this is one of the examples I showed where it doesn't quite engulf the candle before it. So even though this was like a super strong bearish candle, it didn't engulf it and it didn't invert this fair value gap. So like it wouldn't have been a candle that we would have used for this specific model. So there probably just aren't going to be any trades because again, we still don't have any BPRs with price overlapping. So I'll just go to the next session. So let's see if we can sweep the high, which we do, and then pretty much immediately reverse. Let's see where our BPR forms. So the start of this BPR looks like it's going to be up here. So there was a bullish fair value gap right here, but it didn't overlap. Like this wick went a little higher. So the BPR actually starts right about here. And we can look to enter on a retest of the BPR, and I think we can get 2R. Yeah, we can get 2R here. So if we do a limit order right here, let's do entry trigger number 1 and see if this one will work out or not. It'll just go straight to target. So again, if it goes to your TP before getting the limit order, it's definitely best to just cancel them. These become a lot lower probability if they've kind of already completed the move and taken that kind of lower liquidity that you want to use to help fuel your trade. So we'll just cancel it unless we see a conflicting long trade. I see. Would have worked out in this case, but more often than not, you will find that if it runs to your take profit before it comes back to retrace, it's definitely best to just cancel those orders. So I'll probably just say here, already went to R prior to retest. No trade. This is definitely a less common thing to occur. Most often, it'll be a loss after this. So go to the next session. Let's see where we go next. All right, down here. I'll do a couple more trades and then we'll take a look at the analytics and kind of talk through like overall like how we feel about this variation of the model. Looks like we may just range. Haven't taken the low yet. Still have not taken it. Yeah, we just kind of ranged. We stopped just shy of this pre-market low, but we didn't quite take it, so I wouldn't have taken this trade. One thing you might be able to do, because it is actually another form of SMT divergence, is you could potentially chart both CFDs and futures, and there is a reasonable likelihood that on this day, what was this, May 23rd, 2024, maybe the futures pair swept this low, but the CFD pair didn't. That's also another form of SMT divergence, like two highly correlated pairs forming different price action, and maybe it would reverse if something like that happened. So maybe there can be benefit to charting both of them and like kind of looking to see if that price structure happens. But for this CFD pair specifically, we never swept this low, so we don't have any trade on this day. Again, just out of curiosity, I want to see what happened. Yeah, we did get a pretty nice reversal after that. So I suspect that that might be what happened at that point, is the futures pair swept it, but CFDs did not. So let's see if we sweep the high. There we go. And now we're looking for a potential BPR. Actually might have gone too far forward, but I think I can still record this. So we have a BPR right here from this bullish fair value gap and bearish fair value gap overlapping. So we can do a retest right here for we can get 2R down at the bottom. So place order, sell limits. This is entry trigger number 1. And see how this one worked out. Bummer. Went up quite a bit. Actually up over 1.6 hours. So yeah, again, you can play around. If we have a lot of, we'll actually take a look at the analytics shortly after this. If we have a lot of trades that are going up and coming back on us, it might be worth going break even after like 1.5 hour or something. I think there were at least two of those trades that did that in the sample size we've done today. But you really have to have a larger sample size before you can do that further analytics. So we've done basically 3 weeks in May. Let's go ahead and take a look at some of the analytics, and I'm going to start looking at this session we just did here, but then I'm also going to show you guys, I think I did 14 other trades as well with, I think in early 2025, so slightly different market conditions, and pretty consistent with the first version that we saw. So if I clear out the tags from the NASDAQ, we had, I think, literally exactly a 50% win rate. So pretty similar results using the same model with 3-minute time frame during London session with gold. And we definitely did have a little bit of drawdown here. I think we went down about 2R. We had a couple losses in a row, but then a couple wins to help get us back on track. So overall, we're able to profit about 4R during these 3 weeks. I mean, so maybe you can catch 3 to 6 hour a month potentially with a strategy like this. I'm going to go ahead and add, let me make sure I have my sessions set up with the strategies tied to them. So I have the strategy tied to this first session, and I have the strategy tied to my initial session. So I can actually go in to the analytics and filter on the Venom Model strategy. And then I'll apply that. Perfect. Yeah. So this is basically all of the testing that I've done with this version of ICT's Venom model. And so I had 100K balance on both of them. Looks like I got about 8R collectively between the two of them. Same thing, like roughly a 50% win rate, but I definitely want to show you guys some potential insights from the different tags. So if you remember, the entry trigger 2 was the breakout trigger that I added specifically for cases where there's a really strong inversion of that fair value gap, and we're probably not expecting there to be a retest. And so I want to show you guys how the equity curve changes when we look at that specifically. The win rate bumped up from what it was like 45% up to 63% now. So it's a pretty significantly higher win rate, and our profitability went up as well. So something that could be a pretty, and again, you need to have a larger sample size to really make this decision, but I kind of have a feeling that you might actually get better results if you're trading this Venom model on gold 3-minute time frame during London session if you only take the entry trigger 2. Because on the flip side, if we look at entry trigger 1, obviously it's going to have lower win rate and lower profitability. Actually wasn't even profitable at all during this small sample size that I tested. So the BPR retest actually like pulled down our results quite a bit during this sample size. So I recommend testing both as you start to backtest this. You can get larger samples. I think once you have this over like 50, 100 trades, that'll probably be a big enough sample size to really like decipher if that's true or not. But just based on what I've tested so far, it seems likely that you're going to have better results if you only take this entry trigger 2, kind of the market entry from when you have an engulfing candle after a sweep of that higher low, because gold tends to just kind of take off more often than not after that. I mean, it was 60% win rate, so you're going to have less lower loss streaks. I think we had only 2 losses in a row when we did this versus when we had kind of everything together. There was probably a larger loss streak during that sample size. 5 losses in a row when we had everything, because obviously win rate was a lot lower. So I hope this gave you guys something to play around with, but this is really just goes to show you guys, if you see a model that you really love, but it's on an asset that you don't trade, or during a session that you're sleeping or something, you totally can play around with trading the same models on different assets, different time frames, different sessions, trying to use a lot of the same rules and everything, so it kind of keeps the edge from the model, but fine tune it, and you can gather data to really feel like how, get a feel for how you can actually trade the strategy. So I hope that you guys can test this out on gold a little bit more in the London session. I'm not sure how it'll work with like forex pairs. NQ and gold tend to be more like a bit more volatile than forex pairs. I think if you were to try to trade something like this on forex, you'd probably need at least like 5-minute time frame at the lowest. Like you definitely wouldn't want to go any lower than 5 minutes, just because the spreads are a bit higher in forex. And then like forex just moves a little bit slower, so you might like the 90-minute windows before and after, you might need to just use like session highs and lows instead. But you could potentially still use these entry models if you're trading like a reversal model. Like maybe you're interested in trading the Judas model, and instead of waiting for a full-blown market structure shift, maybe you can use one of these kind of BPRs or engulfing triggers that help get you in a little bit earlier on those reversals. So even if you can't trade the exact model, maybe the entry trigger can still help you if you trade like a reversal model. But yeah, I'll be in the Discord if you guys have any additional questions. I hope you guys got something for those of you that trade London and you want to trade ICT's new model. Just can't trade during New York, or you prefer trading forex, or the 1 minute time frame obviously is not really an option with most CFD prop firms. So maybe this 3 minute on gold helps give you an option, and this could also be tested on New York too. And gold is something that I think you could test the same exact time frames, 30 minutes or 90 minutes before Asia session, London session, or New York session for your range, and then looking for trades like those first 90 minutes of each session. So regardless kind of which session you trade, this does seem like a model you can at least backtest and get some information on. So yeah, I'll be in the Discord if you guys have any additional questions, but hope you guys enjoyed the stream, and I hope you have a great weekend. I'll catch you later. See you guys.